And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California. It is a bit gloomy outside for a turnaround Tuesday. And again, we have some major economic data coming in this week. And I would want to start it off with Dixie, the chart to rule them all. And why do I say that? Well, there's just a direct inverse correlation with the dollar's strength and risk assets. So when the dollar goes up, typically risk assets like the NASDAQ and the S&P go down alongside Bitcoin. And vice versa, when the dollar goes down, risk assets typically go up. But did want to touch on some major news, I think, coming in this morning. JP Morgan even said that if CPI comes in hotter than expected, there's a risk of a 5% tumble in the stock market. And they said, quote, "This feels like another negative 5% day." The team added by Andrew Tyler wrote in a note Monday saying the S&P dropped 4.3% on September 13th when August inflation reading came in hotter than expected. The scenario is the worst case laid out as a rough guide for clients seeking to navigate the heightened market volatility around economic data. So JP Morgan economists led by Mike Ferroli expect September CPI to decline to 8.1%, in line with the median forecast in a Bloomberg survey. So the data should arrive in a range between 8.1 and 8.3%. And the bank's sales trading team sees a potential buyer's strike where the S&P slides 1.5 to 2%. So in general, rule of thumb, if it's the reality versus the expectation, if the expectation is 8.1 to 8.3, actually, I think most surveys have it in at 8.1. I would say if we come in anything hotter than 8.1, it'll show, it'll be like last month. It will be like last month. Another piece of news in from the IMF today. So the International Monetary Fund lowers global growth forecast with risk, quote, unusually large and to the downside. So yeah, all the European WEF people, everybody's begging for Powell to stop raising rates. And they said in a note here, in a somber summary of multiple risks facing the global economy, the IMF on Tuesday downgraded its forecast for the next 2 years to the lowest rate since early 2000s. Notably, the IMF organization said, quote, "The balance of risks is titled firmly to the downside with about a 25% chance of 1 year ahead global growth falling below 2%, which would place it among the lowest levels since the 1970s. So the IMF is now forecasting global growth to be at 3.2% in 2022 and 2.7% in 2023. Those estimates have been reached down from earlier estimates inflation. Meanwhile, it is projected to be at 8.8% in 2022, up from the 4.7% in 2021, before declining to 6.5% in 2023 and 4.1% in 2024. So what they just keep doing here is revising their expectations down for GDP and up for inflation. And it just sounds like they're trying to take off the Band-Aid as slowly as possible. And that's, I'll touch on some more crypto news at the end, but I want to get into some of the analysis for the day as the markets are moving. And you can see as Bitcoin on the 4-hour, as the dollar on the 4-hour time frame has had a slight pullback off of a couple drives of bearish divergence coming from this point right here. So we have lower highs in price, higher highs in RSI. Looks like the 2-drive variety to me, which the first target is the 21, the second target is the green 55. If we do not put in a higher low here and really start to close anywhere below 112.25 on the 4-hour time frame, I would look for this to come back to the bottom side of this trend line and at least play out one more bounce coming in over the next 2 days. Remember, today's Tuesday. We got Wednesday and Thursday, the economic data coming out, PPI and CPI. And I think both could have some impact on the economy. Those numbers come in at 5:30 in the morning Pacific time. Okay. So now that we got a little bit of a bias on the 4-hour time frame, so our really very short-term time frames, we did say yesterday on Dixie that we'd expect Bitcoin or the dollar to continue moving higher as long as we closed above the 618 fib. And we did yesterday have a daily closure that is kind of known as the golden pocket. So, bull traps can come in right in this area and then get thrown right back down. And I think that's the question over the next couple of days is, are we going to rally into the CPI print, or is the dollar going to continue to melt up and push Bitcoin closer to the bottom side of the range, which is that $18,100 pivot. We're looking for a 12-hour closure below there to really say, hey, this move has started, and preferably below 17,627 on spot price. And on the CMEs, it's a little bit lower. Yeah, or it's a little bit higher. It is at 18,130. And I would say that is good enough for me. So this is, a sideways market playing out the bearish divergence we spoke about as price was making lower highs and RSI is making higher highs. Coming back from this pivot right here, you've got 1, 2, 3 drives, and that should give you the shot to the bottom side of the range. And this may have already played out. It all depends on what the dollar does. So that's really important right now, I think, is the dollar. If it continues to stay strong, bad for risk assets. If it gets weaker, that would be good for risk assets. And personally, I don't see how, the inflation numbers can come out better than expected. I think the Fed is trying to take off the Band-Aid slowly, as they told us inflation was transitory in the beginning of the year. And now they're giving us these watered down numbers that, show that we're just missing expectations slightly, when in reality, I think they're a lot worse because I don't think they're using the proper inflation numbers, which calculate inflation with food and energy costs. They're only looking at the new way, which doesn't account for food and energy costs. We all need food to survive, and we need gasoline, that's for sure. So I guess another thing I will point out, so I'm going to show this here on the 4-hour time frame for Bitcoin. We are still maintaining the downtrend, although I do think that we could potentially have a bit of a bounce here, especially if the dollar comes back to the bottom side of the trend line that we spoke about here. If the dollar comes down to this level at about 110 again, or anywhere along this trend line over the next 2 days, that would line up with Bitcoin playing a bounce at least to the top side of this trend line on the 4-hour time frame, which the 0.5 is coming in at 19,648. And I would say that is pretty much the pivot on the market to be watching out for. Same thing on CMEs. If we start closing back above that pivot, which is coming in at 19,640, you'd wait for confirmation above 19,555, looking for a shot back to the top side of the range at 20,500. So the 4-hour time frame seems to be ruling the market right now, and momentum is just crossing to the downside. We'll cross up above 20,088. Sorry, that's on the daily time frame. Volatility is just bouncing off the moving average here. So this move could potentially have legs, and especially if we see volatility start to get above 20%, that can happen very quickly. And since the price has been compressed for so long, I wouldn't be surprised to see a bigger move coming out of this consolidation. You can see here, how long did it take? 2 days to get above 20%. And let's see what kind of move we saw back over there. So the 2-day, as we began to see expansion, right? If you wait for the 20 percentile, you don't get the whole move. Bitcoin, I believe this was the 2 days right here. Yes. 1, 2. So 2 days. Yeah, this was the big move on the second day. The Stokes were crossed down. Volatility was beginning to expand. And you had a bit of a Joule sell signal as well. So let's see what the Joule is doing right now. And we're getting the same sell signal on the Joule. All this thing needs to do is turn purple tomorrow. And that would be another confluential factor. The other thing we'd want to see is the DMI maintain. Oh, it's already red. So that is pretty much confirmation there. However, if today does close anywhere like this is an inverted hammer. That is a bounce type candle, and you could expect bounces to come up anywhere. A weak bounce comes up to the 382, a stronger bounce up to the 0.5 or the 618. Very strong downtrend. So that is just something to be aware of on the opposite side of the market. But again, because, again, conservative investors going to wait for the closure below the last major wick, which is coming in at 18,100 on a daily time frame. If you wanted to front run it on a 12-hour or a 4-hour, you might be a little bit more aggressive, playing the downside as soon as that breaks. And again, it's not financial advice. I'm not a financial advisor, just giving you a picture of what I'm looking at currently on the market. And I will say this, if Bitcoin does take a leg down, if it does take a leg down, altcoins should do the same. And that, so where is the target off of this consolidation if we do break to the downside using candle bodies? For this range, as you can see, we were ranging from September 13th to now October 11th, so about 30 days. And this is on the 12-hour time frame, and that gives us a target at 17,150, and I would expect at least a bounce right there. And if that fails, then, next target down at 15,000. And again, this would all be in line with the dollar having, a continued breakout, maintaining its uptrend on the daily time frame, because the higher term time frames are significantly bullish. And really, we need to make another higher high, close the week somewhere above 114. Would look good for continuation on Dixie. All right, I'm going to wrap it up with a little bit of Ethereum analysis. So I guess the key term, the key thing to be watching out for is, what does the dollar do now? Do you think the dollar is going to be losing strength given the economic conditions that are surrounding us? Other currencies like Europe, they're falling apart. The pension funds in Europe are falling apart. Interest rates are rising. And the stock market is continuing to make new lows. The NASDAQ just put in a new low yesterday for the year, and another new low for today. So let the trend be your friend till the end of the trend. Here's another thing I like to keep an eye on for the weekly time frame on the NASDAQ is this guy right here. It is the white 200 simple, and I did want to check in on this. I'll clean it up just a tad. But that is this level right here, the 200 simple moving average on the weekly time frame. If that is lost, look, the last time we lost the 200 simple, here was the COVID crash. And this is the NASDAQ futures, so I'll just throw on the S&P. Read the COVID crash back here. We lost the 200 simple on the weekly on the S&P. Then you had 2008. And you will see a bounce, right? Typically, we lose that 200 simple moving average. We play out a big bounce off the 377. Come back and test it as resistance. And then you get the big, massive, capitulation. Same thing here. Lost the 200 simple, came back, retested it, and rejected. And you can notice where those bull traps are going to come in by using the fib tool. You get a big wick down. And what happens? You come up to the 618, put in a bull trap, and it throws it back down. So if you are considering looking at the bottom side of the market and how to play that, well, once you break those previous wicks, what's the next target down is the 1618 fib, which lined up just perfectly if you're using, well, that's not fair. We'd have to use candle bodies. So I think the wicks are probably the best thing. And that almost gets it perfectly at the 1618 for then another bull trap right at the 618. And that would be the 326 on the 382 on a bullish retracement. Let's just double check that. Yep. So vice versa, again, that 618 fib is going to provide those bull traps and bear traps. So you go from the high, from the wick high to the wick low, comes up to the 618, another double top, and boom, back down. So you can see in a bear market, you're actually going to get the biggest rallies in the stock market, right? When the market's going straight up, you don't typically see those big rallies up. It's more small corrections and just a little up every day. Bear market rallies are, there to sucker people in, get more liquidity, and then dump it back down. So be very, very careful out there. That was a 24% bounce. And I'm looking at the 2002 financial crisis, the dot-com bubble. This was the 2008 bubble. Again, the 200 simple is where we start to lose things. We saw it lost here, and I believe if we do begin to lose it here, let's see what the Dow is. The Dow just lost it, holding on by its two front teeth. The S&P's holding on, and the NASDAQ has now lost the 200 simple. So not exactly your picture of health and prosperity for the stock market. Okay. So back to Ethereum. And this is after the merge. And we had been saying, hey, look, you might want to buy the rumor, sell the news type of event. That's typically how those guys play out. And on the daily time frame, we confirm this as another lower high, giving us a shot back to the bottom side of the range. And I do believe if you lose this on a daily time frame, 1,216, very, very likely we're going to make it all the way down to the low thousands and probably put in a bounce there to be fair. But to give you an idea, if this does play out, the explosion plays out to the downside, that's 19%. And you have the same type of setup here. And this isn't a guarantee. It's not a guarantee to work out, right? But as volatility begins to expand above the 20 percentile, We've got our momentum indicator, the stochastics coming to the downside. By the way, if you want to set up a free trading view account so you can track along with us, there's a link in the description below. And don't forget, if you enjoyed the video, hit the like button and subscribe so you can get all the future notifications and be made aware of, kind of these market updates as they come. Okay. So again, Stokes crossed down, low volatility. As we begin to see expansion, you would expect the price to go in the direction of the trend, and that is currently in a downtrend. We do have a chance to make another higher low here. So to be fair, 3 higher lows, the 3 valleys rule, could give you a bounce coming over the next couple of days. All depends on how the market closes today. And above 1342, which is the area we've been hanging out for months, it seems like, that's probably going to look good for a shot up to the 21 again. So that's all I've really got for Ethereum. On the weekly time frame, that is, Ethereum's going to do whatever Bitcoin does, but more. That's what I would say. And weekly Stokes are down. Volatility is beginning to tick up. And you've got how many drives of bearish divergence? Do we have any on the weekly time frame? Nope, we do not. Do we have bullish divergence on the other side? Yes, we do. If this confirms as a local low, we will have 2 drives of hidden bullish divergence from this pivot right here and this low and this low. These are current higher lows in RSI. Are they higher lows? No, they're not. They're higher than this low. Okay, so it'd be from this pivot right here. So as you can see, RSI is putting in 1. Could you call that 2? Maybe 3. This got to confirm as a higher low. So 2 drives gives you a shot to the 21. First target, second target as high as $2,000. We'd really have to defeat this weekly high. And that would, show us something potentially new is happening with Ethereum. So I'll be on the lookout for that. Last one here. What did I want to show on the lower term timeframes for Ethereum? Because this one actually is been some of my bread and butter. But as long as we are maintaining this downtrend, it looks like even on the hourly time frame. No, we're just getting the retest, excuse me. So this has the potential on the hourly time frame for a reversal. What is a reversal? We get the higher high, higher low, and that is going to be the etchings of a reversal on the 1 hour time frame. That's where it would most likely start, and then you'd have the same thing populating. Let's see if we're maintaining the downtrend on the 4 hour time frame. Okay, here's an easy way to do it with the fib retracement. That's where you expect those bounces to come in. So on the 4 hour time frame, if we start closing back above actually this pivot right here at 1,309 on the 4 hour, I would very likely look at this as a bounce and probably going to get back to the top side of the range. Actually, with a 4 hour above 1321 would be good enough to do it for me on the 4 hour time frame. Last one I'm going to look at here is XRP, which is maintaining the downtrend and did confirm a daily drive of bearish divergence. So we've got volatility up, Stokes down on the 4 hour time frame. Is this a pity bounce before more continuation to the downside? Well, now that'll be mediated with any kind of a 4 hour closure back below this pivot at 48 cents. And very likely, I think we're probably going to come back to the purple 200 and play at a bounce. We've been away from the purple 200 for a long time. after a golden cross, and typically the first play there is going to be a bounce, even on a 4-hour time frame. If we check it on the 1 hour, didn't bounce the first time, bounced the second time, shot through it the first time. That's different than a 4-hour time frame. But this is what we were looking for to confirm that bearish divergence on a daily time frame. So we've got a higher high here. And this probably goes back all the way to this pivot right here. So you can see a slew of lower highs in price. All these are lower highs versus these higher highs in RSI. Zoom notification. Looks like I've got a Zoom call coming up. We're 25 minutes into this video, but the main drives are going to be from this point. This is a lower high and a lower high, but a much higher high in RSI, getting kicked out of the bullish control zone. And off of this confirmation, I would look for probably another leg down, at least to the bottom side of the range. If this starts to break on a daily time frame at 44 cents, I would say there's a good chance we revisit the highs of this range back here down at about 38 cents. Are we getting anything on the weekly time frame? Not necessarily, except for this would be 2 drives of bearish divergence coming back from this point. How would we confirm this as a local high? We'd want to see a closure on the weekly back below 42. And that would look not good for XRP. That is not the result you want to see at the end of this week. If you're in the XRP army, best case scenario, we get some better news coming out on CPI and we get a rally up to the 618. I do not think this guy's going to defeat 59 or 66 cents on any kind of a higher term time frame. Might get a wick up there off some news, but overall downtrend is in place. You can just see going all the way back to May of 21. This thing is just making lower highs on the weekly, and you would expect your trend to be your friend till the end of the trend. That's it for XRP, and I'm going to finish it up with 2 last pieces of inning news that I found out there earlier today. So we got Yahoo Finance, BNY Mellon starts crypto custody service. So the world's largest custodian bank and the oldest lender in the U.S. called New York Mellon has added cryptocurrencies to its custody services, according to a press release on Tuesday. To this point, traditional fund managers interested in holding digital assets who otherwise rely on BNY Mellon or other custodial lenders to perform the necessary back office tasks related to their usual securities holdings typically would have had to find a firm specializing in cryptocurrency for custody services. So BNY Mellon is now able to provide those fund managers with storage of keys necessary to access and move around their Bitcoin and Ethereum. So we work with Kingdom Trust, a much smaller firm that does offer custodial services for your IRA, where you can put Bitcoin or cryptocurrency in your retirement account. And look, I know the market looks bearish right now, but Ray Dalio, the founder of Bridgewater, the biggest hedge fund in the world, was just interviewed, and he said, look, quote, I own Bitcoin, and personally, I'd rather have Bitcoin than a bond. And that makes sense with all the problems going on with the European pension funds. And he also said, as more people adopt Bitcoin as savings, governments are going to start to lose control. And he said, quote, the world is going to change at an incredibly fast pace, and whoever wins the technology race wins it all. And look, Bitcoin is the technology of being able to send money anywhere in the world almost instantly for free. It's life savings technology, right? It's a fixed supply asset that no person or government can take away from you. And it's growing rapidly. That's why the banks are getting involved, right? That's why they're, everybody from Goldman Sachs to JP Morgan, Visa, they're now accepting Ethereum as a form of payment. Singapore is the first sovereign nation to, put Bitcoin on their balance sheet. So what else? More bullish news. Google's partnering with Coinbase to let cloud customers pay in crypto next year. I wonder why Google wants you to pay in crypto. So it says Coinbase and Google crypto-based payments will become available to customers in Web3 space early next year to start. To enable these payments, Google will use Coinbase Commerce, a tool that lets businesses receive, accept, and convert cryptocurrencies, including Bitcoin, Ethereum, USD Tether, Dogecoin, Shiba, and others, as noted by CNBC. Coinbase will take a cut of the transactions made through its commerce tool. Google plans utilizing Coinbase Prime as well as an institutional-grade crypto trading platform primarily built for large companies to store and trade cryptocurrencies. As a part of the deal, CNBC says Coinbase is moving some of its data-related applications from Amazon Web Services to Google Cloud. Google will also start using Coinbase Node, a tool that developers can use to gain access to blockchains and build decentralized apps to power its BigQuery crypto public data sets. This aligns with Google's goal of providing a backend for the Web3 developers, which CNBC says Google formed a team for earlier this year. So why are the big banks and Google and Facebook and everybody getting their hands inside the cryptocurrency world? They know it's part of the future, and either adapt and change or you will not survive. It is survival of the fittest when it comes to technology. If you don't have the best technology for your business, for your customers, guess what? You are going to be gone one day. You're going to be replaced by Elon Musk, Tesla robots. I'm just kidding, but that's the crazy realities we are dealing with. So it's very, very important you become acquainted with cryptocurrency, how the markets work, how they ebb and flow. They're not going to teach you this stuff in school. That's why we're here to offer some free services. And, hopefully by giving to you guys, we'll get something back. I don't know. One day I do this for fun. I'm just giving you my ideas in the cryptocurrency landscape. After being here for, since 2017, I've learned a few tricks of the trade, and that, one of the main principles to take away is Bitcoin rules the market. Whatever Bitcoin does, altcoins are going to do more to the upside and to the downside. And this is one we have been talking about for some time. ApeCoin looking relatively weak here, breaking the current, is it breaking it? Has it broken on the weekly time frame? It certainly has on the daily time frame when it comes to maintaining the downtrend, lower highs, and now we are putting in the first lower low. So all depends on if we break this pivot here, whether we put in a bounce or not first, and maybe come back and test this trend line. I may not, that was the weekly time frame. I had it drawn out on the daily. Actually, let's take it back here and show you what a trend reversal looks like. Hopefully this will start to make sense for some people out there, but it's all about trend. The trend is your friend till the end of the trend. So we had the higher highs right here. Higher high, higher low, higher high. And now we just got the first lower low and lower high, and that was your indicator, hey, we're looking at a trend reversal. We had a little bit of a sideways market. Now we're breaking the range to the downside. And that is the etchings of a trend reversal. You get the first lower low, lower high, and boom, lower low, lower high. This was, could you call that a higher low? yes, you could call this a higher low, but we did not get another higher high. So another lower high and expansion to the downside. And what do volatility has not even begun to tick up. So let's just look in Ape's history, and this is on KuCoin. I don't know if there's any further history, but we just regained the exponential on the daily time frame. And if we consider the last low points, the average move on the daily time frame, and this is part of back testing your theories. So that was a 34% move there. We had another low period right here, but the move came to the downside. That was a 32% move right there. We had another low period right here. This was 25% to the upside. Another low period right here, and that was a 53% explosion to the upside. So we got 50, 20, 30, 30. If we do a little basic math, I think the average move probably going to come out somewhere around 30, 32%. Another low period right here. So low volatility. And it looks different than Bitcoin, right? Obviously, you can see these are the low periods of volatility. But as we got expansion, you can see that was probably a fake out right there. A bit of a fake out. So we got expansion to the downside, and then it reversed it back to the upside. This one got expansion and just went straight down. That was the June 2020 dump. Probably dumped right alongside Bitcoin. So would we expect some kind of a bounce here? Well, let's see how the day closes. We'll follow up on ApeCoin. But I was looking at this on the weekly time frame actually a few months ago and just saying how it looked relatively weak, and I would expect ultimately this one to come down back down to about 380, and better pray and hope it doesn't break that point. Okay, that's it for Ape and Ethereum Classic, another one we've been talking about for some time. Going to do what Ethereum does, but more, and you can see it's down 0.72% today. Probably looking to put in a bounce here on Ethereum Classic. In fact, I would expect a bounce. This was the impulse move. Bounces are going to come up to the 0.5 or the 618. And that'll be based on a confirmation closure. Any kind of a 4-hour closure above 24.28 very likely gets you that bounce. And how many drives of bearish divergence do we have? Any? Sorry. Bullish divergence. So price is making lower lows, RSI is making lower lows. Wow, it doesn't look like we really have anything. This is the last low to hold up the market. On a closing basis, yeah, it's a higher low. So that's coming all the way back from July 2022. This little consolidation right here. Big swing down for Ethereum Classic. So, yeah, again, the 4 hour is going to get the direction of this. And I would say a closure above here or below here is going to get you the next pretty good size move. All right, I'm just rambling for today, guys. We got the Google partnership. BNY Mellon starting to accept crypto. However, on the other side of the fence, we got the IMF lowering global GDP, revising the numbers down, revising the numbers up for inflation, and JP Morgan saying, hey, look, if CPI comes out hotter than expected over the next couple of days, guess what? Markets could risk another 5% tumble. Which side are you on? Are you bullish? Are you bearish? Put a note in the comments below. I'd love to hear from you guys. And thanks, and have a blessed, highly favored day. We'll see you tomorrow. Take care.